change inanifundisha kupenzi inanipa somo.
A fourth place goes to University of Dar es Salaam Team D. A third one is University of Dar es Salaam D. Okay, so those teams will proceed to the next round. You'll come and present. And now, we had seen tables are turning at this stage because now the score will be based on presentation alone. So make your presentation good. Answer the questions posed by judges so well. You may find out the third team can be the first team. Okay, so don't give up. The competition is still stiff. To Mzumbe University, don't feel like you have already won. You need to make some efforts, okay? So thank you very much and all the best. Lucy, please.
Okay, we are group number 5, and I will continue the presentation. And have you ever noticed, or have you ever been able to, and one and only stock exchange in Tanzania? And we are going to start presenting the Dar es Salaam Stock Exchange, and we'll present a valuation of the Dar es Salaam Stock Exchange, whereby we start with the recommendation, whereby we issue a buying recommendation with a targeted price of 2,021 shillings, which indicates an upside potential of 12% from 1,820 shillings as of 26 January 2020. And this was influenced by mainly 3 reasons, whereby number 1 is strong management initiative to broaden sources of income. Number 2 is strong competitive position, as it's the only stock exchange in Tanzania. Strong financial performance since the year 2016 and currently, despite the COVID-19. I'll also take you through the business overview, whereby, as you can see in the chart, it was established in the year 1996 as a private limited company, so as to facilitate implementation of the government implementation of, so as to facilitate government implementation of the economic reforms, which is the privatization. And in the year 2016, it started operating as a public limited company, and throughout the years, it has been formulating and implementing some of the strategies. This includes the Dar es Salaam Investment Challenge, which is to increase the awareness on the operation and also to increase awareness on its products. And also, other strategies helps to facilitate the trading activities, not only trading activities, also to facilitate listing of new firms. And in addition to that, Dar es Salaam Stock Exchange has mainly 6 sources of income, and we see that the listing fees and the investing income contributes to the greater percent of the Dar es Salaam Stock Exchange income. And all in all, Dar es Salaam Stock Exchange mainly aim to facilitate or to increase the wealth of the shareholders.
Okay, so I will take up from the second speaker, and I will pass you through industry overview in general, and we have actually performed our analysis specifically looking into 2 regional communities, which is SADC and East African communities, as it can be displayed. So we are seeing the performance by market capitalization, which in SADC stands to 5.1 USD billion. In East Africa communities stands to 5.58 USD billion. This is performance by market capitalization. So this is actually in a good situation, and it marks a very great performance in the future. And this is mainly due to key opportunities it has under competitive positioning. So the first is raising financial market awareness. So in raising financial market awareness, DSC has been providing educational programs and workshops which educates investors on risks as well as the role DSC plays in economy, allowing foreigners specifically in SADC and East African communities are allowed to trade in secondary market transactions. We're having government actions, so government has been playing. We're also having enterprise growth market segment, so this ideally enables small market enterprise to raise capital as well as to increasing in listing fees. So we have also gained insights into competitive advantage of DSE using Porter's 5 forces analysis. So starting by barriers to entry, it's low. So it's low due to initial costs and operating costs as well as government regulations. Substitute, it's high. We have so many platforms of raising capital, so investors have options to invest in different platforms. Bargaining power of suppliers, we're having so many suppliers, so this marks the low bargaining power of suppliers. We're also having bargaining power of customers, so bargaining power of customers is low due to initial pricing of the share of the company is being done by the company itself. Thank you.
Okay, thank you. I'm going to take you through financial analysis. In financial analysis, we divided into 2 main parties, and the first one is company financial performance, and the second one is shareholders ratios. Starting with the margin ratio and profitability ratio, there with is an increasing paternity, and this is due to DSE. Example there from the earning before interest, tax, depreciation, and amortization, we see an increase from 2018 to 2020, and this is due to increasing in transaction equity fees and CSDs. Going to liquidity, DSE shows a the SE meet a short-term obligation is sound, and we see in the graph there the current ratio is greater than the cash ratio, and this is because the SEs not rely only on cash holding to meet their short-term obligation, but rather in the mix of liquid assets such as short-term deposits and treasury bonds. Moving to optimistic outlook, the SE has a positive outlook based on several key factors such as increasing investors base and increasing in other product listing in the market. Up to 2023, at the end of 2023 it is 0, but they forecasted to reach 2027 they will have 11 product listing in the markets. Or moving to shareholders ratio, we have payout ratio and earning yield ratio. Payout ratio, it seems to be above 50%, and earning yield it is more than 5%. Combining this, it shows that the SE show it is commitment on paying their shareholders a dividend, and give us the buying recommendation and the promising investment opportunity in the SE.
Okay, thank you, Chris. I'll take you through valuations. We actually conducted valuation by using the two methods. The first one is dividend discounted model. We're actually using this one because of the consistency dividends paid out by the DSE since it had become listed or public limited company in 2016. The component we are using in coming out with the intrinsic value is risk-free rate of 10 years, which is yield rate from Tanzania Treasury bond of 5 years, beta of 0.8 sourced from Damodaran's financial services sector, which is non-banking insurance, equity risk premium of 12.64%, which actually sourced from Damodaran's Tanzania equity risk premium, and we have applied the CAPAM formula to come out with cost of equity of 20%, and we have used the terminal growth rate of 6%, which obtained as an average of sustainable growth rate, and we believe that will be the continuing growth of DSE with an value in DDM. DDM method is payout ratio. We have maintained a payout ratio of 56%, which we actually obtained it as an average of payout ratio from 2018 up to 2022, and we come out with intrinsic value of 1,307 Tanzanian shillings. Coming out with other method in valuations, we're just using discounted cash flow to equity, and we have using the same component in coming out with the intrinsic value as from dividend discounted model, and we arrive at intrinsic value of 2,180 Tanzanian shillings. So we give more weight to DCF than DDM. This is due to the fact that the ability of company generating cash for the past 5 years seems to be higher than the dividend giving out, which is nearly to 80%. Continuing with investment risk, we actually know that there is no any business which operate with no the consequence of risk, and DSE can't be excluded. But the management initiatives and strategies in minimizing the effect of risk in DSE operations, we actually analyzed the 5 risks concerning the DSE operation, and we have applied the risk matrix evaluations to determine the likelihood and its impact in DSE operations. In our analysis, we determined that the credit risk becomes its major risk in DSE operation because in portfolio management of DSE, in terms of short-term deposits, in terms of total asset, they have more than 55% of its asset in short-term deposit in commercial bank. So the likelihood of failing the operation of commercial bank will affect much DSE operations in terms of revenue, liquidity risk, and market risk.
And I'll take you to environmental, social, and governance, where I base the analysis on sustainable development goals and also sustainable stock exchange. When you talk about Hisa Kiganjani introduced by CRDB, this platform will enable both foreign investors and domestic investors to see what's really happening in the market and to have easy access of the market without the intervening of the brokers. Also, DSE assures good customer satisfaction through providing daily, weekly reports in the social medias like Instagram, LinkedIn, and other platforms. This creates awareness and transparency of the operation and will encourage investors to see what's happening in the market. Apart from that, DSE also provide guidelines to other listed companies on ESG practices and also reporting. With this, it supports our buy recommendation, as DSE is committed and dedicated to the ESG practices, and hence we issue a buy. Thank you.
I think if we can go back to the industry and competitive analysis on the portal. Somewhere you mentioned on portal. Yeah, that one. You've mentioned the threat of the substitute as high, citing existence of alternative platform for raising capital. This information already reflected in your evaluation, and what alternative platform that are available apart from DSE that do you think would affect DSE in terms of numbers of listing?
Okay, thanks for the good questions. We actually analyze on the general performance and the activities of DSE. DSE as a listed company, which mainly business concerning in controlling the market. So we're looking on the two scenario where DSE it stands and have its competitive position. In terms of threat of substitute, we know that there is a company, we know that the company, when it's go public and issues share through the market which operate under DSE and DSE benefits, main purpose is to raise up a capital. But it's not compulsory for any business to go public and using the market to raise up capital. We know banks, SACCOs, and other institutions which may be used for any business to raise up capital with no need of going public. And also in the high level of substitute, we just focus on other area. As an investor has an options, either to invest in financial securities in terms of shares of DSE or any product in the market of DSE, or investing in real estate. So you can see the investors has a lot of opportunity rather than thinking of this, rather than thinking of investing in the market. But actually investing in financial securities, it's more secured because it is more liquid. You can access your money anytime.
So maybe to expand on that one, the core business of DSE is to help companies raise equity capital or debt capital through bonds, right? So what will be the substitute to public securities? What will be the substitute product apart from DSE?
Okay, I think when you talk of the substitute product, of course the main objective is helping companies raise the capitals, but the substitute product, as per what we agreed, we have viewed it in the term of platform in opting whether they should invest in DSE or in other platforms which they think they're suitable as per to their priorities maybe and concerns. So we looked into it as high in the sense of you can opt of maybe using UTT, you can opt of using any other platforms which
Good morning, ladies and gentlemen. As our previous presentation, we're going to sell DSC, and the following presentation is going to justify why we're selling DSC. So, as previously stated, DSC was the only stock exchange here in Tanzania, and also it was established in 1996 as a private company, and in 1998 it was established as a public limited company with its new issuance. DSC's mission is to provide a fair, efficient, and transparent market securities trading to facilitate capital formation and economic development. This is through numerous initiatives such as the SME programs, such as Endeleza, where it facilitates SMEs industry and competitive positioning. As stipulated before, DSC is still recovering, and I say this because this is during 2019. Most of the market capitalization DSC was around 17,000 billion, but it was mostly contributed by foreign investments. But during 2019 to 2020, there was an overall decrease due to the COVID-19, reduction in foreign investments, and reduction in cross-listed companies. Most of DSC's market capitalizations came from domestic market capitalization that contributed to its market capitalization. But going to other figures, you could see that during COVID-19, trading values decreased in equities, decreased from 625 billion in 2019 to 133 billion in 2022. That explains the major decrease in market capitalization of DSC that are listed, such as treasury bonds. In competitive positioning, we could see that DSC holds a quite a good position, second position across East Africa, with DSC and Nairobi contributing to 84% to the market capitalization. However, in the ESC, if you are an investor and you both invested 1,000 in the stock exchanges, you could see that provides stable returns. But in a SADC perspective, DSC still has a long way to go, competing with giants such as South Africa, which is Johannesburg Stock Exchange, Namibian Stock Exchange, and the Malawian Stock Exchange. I say that it has a long way to go because the market capitalization of Johannesburg Stock Exchange exceeds 133 billion compared to the market capitalization of DSC, which is only 4.3 billion. Moving forward, DSC is overvalued in the stock exchange. It trades at 1,860, while through our valuation, DSC is its intrinsic value is 1,684. So DSC is overvalued and overhyped. This implied share price of DSC is lower than the market share price, indicating that shares are overvalued and may decline in the future. This will further be illustrated by the valuation financials. So as you can see, with Finance Group was able to do a time series analysis where revenues are steadily increasing, profits before tax are also steadily increasing, earnings per share are also increasing from 64.1% to 82.1%. Dividend per share is also steadily increasing throughout the 3-year period. Trading volumes in the same, but you should remember and recall that all these figures, especially trading volumes, have significantly decreases throughout the year. And trading values and so on. Market capitalization as stipulated from the competitive analysis. Second, ECG.
Good afternoon once again. ESG, as we all know, it's an issue that is mostly considered by investors and the community at large today. And for DSE, it has adopted ESG, and it is also reporting ESG in its annual reports. And also, as part of adaptation, DSE listed companies should all report the ESG report in their annual reports, as all public companies in Tanzania report on ESG and CSR. And DSE also offers green and sustainable bonds, example Kijani bond, which is part of environmental issues. DSE develops SMEs by introducing schemes such as DSE Enterprise DSE Enterprise Acceleration Program and the Endeleza Program, which it was established in 2020, and as we see in 2021 and 2022, both numbers are increasing for both DEEP and Endeleza Program. Yeah, and also DSE empowers women by listing gender equality bonds, such as Jasiri bonds, which was issued by NMB, and it's the first gender equity bond in sub-Saharan countries. Also, DSE ensures gender diversity in employment and management levels. As we see, DSE also employs female employees. Currently, it's having 36% of women employees in the organization, and it's planning to have almost 40% by 2027. Also, DSE board of directors include many non-executive directors. As we can see, most of the directors are non-executive and independent, except for the chair.
Proceeding with valuation, we use two valuation methods. That is this cash flow. It helps us generate the operating cash flows, and the way that operating cash flows are increasing will show investors that there will be amount that will be paid as dividend and amount that will be paid as that will be reinvested back to the company. And as I already said, the reason to why we use dividend discounting model is because 60% of the earnings per share are given out as dividend. Okay, some reasons to why we have said why we are saying the DSE shares are overvalued is that first, foreign investors' participation has been reducing due to high interest rates and declining. Also, the anticipated lower investor participation, and the current trading volume of DSE is 582,000, and they're planning that 5% of the population of Tanzania should engage in stock exchange. And how we discussed is that this is somewhat unrealistic because DSE is only located in Dar es Salaam and it's mostly based in urban areas. So it was somehow unrealistic because most of the population is also in rural areas. And the last point to why we said it's overvalued is that a large percentage of the listing fees from DSE is from government bonds, and we came to the assumption that since most of the government projects have been completed, such as SGR, which will start working on July, and the Nyerere hydroelectric power, we assume that the bonds that DSE will be providing will reduce. And finishing up on investment risks, we have currency risks. As we already said that Tanzanian shillings, there is fluctuation of Tanzanian shillings due to global commodity prices, as we have seen the change. The change of sugar prices. Also impact is that we should discourage foreign investors and reducing liquidity and potentially impacting stock prices. Another risk was liquidity risk. As I already said, that DSE is a small market and some stocks have low trading volume that makes it hard to liquidate their shares. So among the impacts is to reduce entry and exit options for investors. The other risks, regulatory and political risks, are somehow common and general, but in regulatory risks, it's that changes. Okay, thank you. We welcome questions.
Yes, I do have questions. My colleagues here do have as well. Thank you for the presentation, and since you're the last presenter, I would like to jump straight to the evaluation. And you stated one point about the cash outflow or capital flight due to the foreign investors running away from our capital markets. don't you think that creates even more value in terms of getting the price at a discount? Because when you don't have when you have a big number of participants in the market leaving, it creates an advantage to get in, or the legroom to invest. And just staying on that point about selling the share itself, the first speaker stated that the market capitalization is overpriced, hence the theory of, or the recommendation of, selling the share. Don't you think with the current foreign investors drop, it creates even more legroom for local investors to keep on buying the share itself? And maybe just to leave opportunity for my colleagues to ask more questions, is about do you expect any share repurchase to happen with DSC, because they're sitting on a massive cash pile, and that will prompt them to take leverage, or literally zero leverage? That creates an opportunity for them to optimize their capital structures.
Said the foreign investors that have departed away due to increase of prices, due to fluctuation in interest, foreign investors through the listing fees. So we came into assumption that listing fees and transaction costs. So we assumed that since there was a large number of investors who have flight away, it will reduce income on the way that DSC is generating its revenue. And your second question, please repeat your second question.
Capital structure optimization. So the company sits on massive cash pile. They could opt for share repurchase to optimize their capital structure, as well as the almost zero geared, unlevered completely. So should that prompt them to optimize their capital structure further?
Because DSE has no debt, I maybe pass that question. I am not very competent to answer that.
Can we begin? Thank you. We'll begin in vain. Okay, I'll begin in 3, 2, 1. Okay, so in a world where everyone is talking about globalization, emerging markets, and how companies are trying to strive and make more profits, we cannot ignore the role of financial markets, and specifically capital markets have had in the economy. So specifically today we're going to make a presentation about how an analysis on the valuation of DSC as a stock. A brief summary is that our recommendation is a buy recommendation, where we have our target price at 2001, which is an 11.19% upside from the current. Very good and showing potential for much growth. Number 2 is the strategic positioning of the company in the country. And number 3 is the growth prospects that are available in the country. The next speakers are going to explain.
On the business, another thing, DSC was established according to the Companies Act of 1996, whereby in 2015 it transformed from a mutual company to a public limited company. Further, in 2016, it managed to enlist its own shares, making a significant change in its evolution and market participation. Another thing is that DSC is the only segment that enables companies and investors to trade their stocks. Also, DSC manages the market for the government bonds and bills, which enables it to pivot the financial structure of the country.
Market capitalization of approximately 6.1 trillion US dollars. In 2023, DSC had the highest rate of return of 3.81% compared to other countries in East Africa. We have analyzed our industry based on Michael Porter's analysis. Competitive rivalry is low. This is due to DSC is a monopoly in the market. Threat of substitute is medium. DSC faces mild threats from decentralized finance such as forex trading and cryptocurrency. Rates the market through the CMSA. Supplier's bargaining power is high. DSC outsources its trading solutions from securities and trading technology. Due to low supply of such product, the bargaining power of DSC automatically falls. Buyers' bargaining power is low. Since DSC is a monopoly, it's a price maker while the buyers are price takers, and DSC charges a rate of 0.14% on every transaction. On SWOT analysis, the strengths of DSC. DSC is the only stock exchange market in Tanzania, so it enjoys the benefit of being a monopoly. DSC has adapted new technologies which led it to launch DSC Hisa Kiganjani. Also, successful campaigns such as DSC Scholar Investment which helped to improve awareness among the public about capital markets. Weaknesses include stagnant transaction fees, low distribution channel due to low number of brokers in the market. Opportunities of DSC include room for financial innovations, untapped potential market. Currently, there is only 0.9% of the population is involved in capital markets. Increased opportunities for SMEs. Threats of DSC include competition from agricultural sector, rigidity to financial changes, also new financing models like venture capitals and crowdfunding.
Conservation. In terms of social, it has complied with SDG goal number 8, which is decent work and economic growth through financial literacy and accelerated programs such as the Endeleza program, which enables small and medium market enterprises to attain capital, employment opportunities, and foster economic growth. In terms of governance, it has complied with the standard SDG goal number 5, gender equality, whereby the CEO and the board of DSC have managed to ensure there is equal and active participation of women in its management and consideration.
Okay, so straight to the investment risks that are posed to DSC. First, we're going to analyze the market risks. The market risks, we've focused on two major, actually still ongoing. We do not know to what impact can they affect DSC. Another thing is the interest rate risks. Both global and internal. Currently, Tanzania is Tanzania has already begun the policy rate system by the BOT. This is going to affect the decision of.
Talking about the fin-specific risks, the DSC is on the verge of losing four of its equity encounters, which are Swala, oil and gas. We have Yetu encounters, which have the total market capitalization of Tanzanian shillings 168.79 billions. It's a risk to a DSC because it's a risk to the loss of revenue of DSC. Also, we have another risk, which is overdependence on the government security trading. Most of the major revenue from DSC comes from the security from the government security, which are bonds.
Okay, so straight to the financial analysis, we're going to look at four major aspects on the performance of DSC from the previous 5 years. First of all, we can look at the return on equity. DSC profitable enough, and also market capitalization has been good. Currently, it's one of the most highly market capitalized in the country. Then also, I would like to talk about debt. DSC does not have debt because its operations do not require a lot of cash flow, and they get funds from the capital markets. Then also, 2022. Next slide, please. Next slide. Earnings per share has been good. In the recent years, we've had 101, 188. We're also expecting a good share of dividends this year. Next slide, please. Oh, so this is the projections of what we expect the revenues of DSC to be in the next 4 years, from 2024 to 2027. The assumptions that were used are we assumed first of all
Okay, let's talk about valuation. We first attained the target price of Tanzanian shilling 2001 derived from the two valuation method, which is the dividend discount model and the discounted cash flow models. Taking into account the work of 16.5 derived from the capital asset pricing model, which are raised to 16.45. Take a risk-free rate of 10 years government bond yield, a beta of 0.436, which is derived from as the ratio of covariance of the stock return and the market return to the variance of market return adjusted according to Bloomberg guide, an equity risk premium from Damodaran arriving at the cost of it of 16.5. As he said, DSC has no equity, so the market to this ratio is nil, which brings us to the work of 16.45 equals to the cost of equity. From the given information, we arrive at the
Okay, can you show the slide of the evaluation slide? Yeah. The beta presented there is 0.436, right? I'll have a follow-up question later, but how does that tell us? What does that tell us?
Well, the beta of 0.46 implies that the risk of DSC relative to the market is below the market risk, which the market risk is equals to 1. The DSC beta, which explains the correlation of the stock to the market return, explains the risk of DSC to the market return is below the market return. That means DSC is less risk than the market.
Okay. You're saying that now DSE as a company is less risky compared to the market. Maybe later I would want to know which index did you use?
We can answer that now.
What
TSI,
index
Tanzania All Share Index. We find that to be more realistic than DSE index.
Okay, great. So now DSE, it's a company, and again, it's a pseudo market company, right? How can you convince me that?
Okay.
I haven't finished. How can you convince me that the risk of the DSE is about a half not related to the risks of the market? Because as we see, the cash flow of the DSE, they all depends on what the market brings, right? And other varieties, they all depends to the market. under normal circumstances, I expected the beta to be close to 1 or around 1, but I stand to be convinced with you.
Do I have to answer? Okay, yeah. Basically, that beta, we arrived at it by, we considered the inefficiency of the size of the market, that it's a small market, that's why we adjusted it with Bloomberg. And we also used the Tanzania All Share Index, which is a more realistic index because it uses only those stocks that are available that are originally from Tanzania, which was the actual market events that are happening in the country. Then if we have events in the market, some other companies in the market that are stagnating or having returns that are very much varying, then we'd expect the market to have a general return that can be bigger than DSE as a company.
Thank you for your presentation. Just a quick question. Based on the market risks, you had mentioned liquidity, credit, and some other risks. So my question is, what is the impact of the volatility of the dollar in terms of the market risks? You've mentioned the liquidity risks and the credit risks, among other risks. So I'd just like to understand, looking at the dollar volatility, the US dollar volatility, is that clear? What inherent risk does that bring into the DSE shares, and do you consider it a risk or an opportunity?
It can be both a risk and an opportunity depending on how the level of the volatility and the direction, of course. So first of all, you are very specific with the dollar and answer very specifically with the dollar. When we're talking about the dollar, then we're talking about the global economy. We're talking about how other countries are going to react to us. And therefore, if dollar appreciates in relation to Tanzania, that means that the Tanzanian currency becomes cheaper and people will be able to come and invest here in using less costs. And therefore, answering your question, I'll be very specific with the dollar, that international investors are going to find it cheaper to invest in Tanzania right now. So I do not think if I have Tanzanian shillings, I'll be affected by the dollar, as long as I'm going to invest in DSC, which also uses Tanzanian shillings. It's the same currency used, so there's no... If you're going to talk about interest rate risks, then yes, institutions are going to be tempted to invest in dollars where are having rising interest rates. Is that okay?
A lot of people invest, but wiser people should be investing with Dar es Salaam Stock Exchange Public Limited. We are Team D. We issue a buy recommendation with a target price of 2,048 Tanzanian shillings, closing price of 1,800 Tanzania shillings at a premium of 14%.
DSE was incorporated in the year 1996 and started its operation in the year 1998 when TOL gases was first listed. DSE has a total of 28 listed companies, out of which 22 are local companies and 6 of them are cross-listed companies. DSE operates in the main two business segment, which are the trading segment and the CSD segment, whereby the trading segment for the financial year ended 2022, it contributed about 5.2 Tanzanian shilling billions, and CSD segment contributed about 1.7 Tanzanian shillings billions as a total revenue. Also DSC operates in the main three market segment, which are the MIMS, EGMs, and the debt segment, whereby in the MIMS we have 22 listed companies, and in the EGMs we have 6 listed companies. And the debt segment for the financial year ended 2022, it grows by 29.4%. The customer base in DSC is formed with main 5 pillars, which are the investors who invest in securities, the issuers, mainly corporate companies, also the government, the data clients, and the trainees. The main products in DSC are mainly 3, which are equity shares, corporate bonds, and government securities. Also DSC own an efficient technology which is called Isa Kiganjani with 10K plus users, both local and foreign. Also DSC has a qualified and ethical management team which ensure the creation of shareholders' value.
As in 2023, Dar es Salaam Stock Exchange and SADC zone has ranked as the 4th largest company with a valuation of $4.3 billion US, compared to East Africa. Dar es Salaam Stock Exchange had ranked as the 2nd largest company with a valuation of $10 billion US. All this involved the participation of both the local and foreign investors, in which are accomplished due to 2 key drivers, namely as the demand and supply drivers, whereby the demand drivers include the liquidity and monopolistic advantage, while the supply drivers include government incentive and technology. However, we issue a buy recommendation due to effective network effect with other regional stock exchange, regulatory barriers, brand recognition, and favorable margin.
Pertaining investment summary, we recommend investors to buy because DSC has ensured a potential return to its investors due to its staunch, diversified portfolio. We have seen the prominent increase in listing fees from issuance of government bonds, regardless of the COVID-19, because during the COVID-19, investors were seeking to invest where there is a low risk. But also the transaction fees from issuance of government bonds has increased in value, as seen pre-COVID and post-COVID. There have been an increase because of increase in value of the treasury bonds from 2018 to 2022. But also the interest received from investment in short-term deposits has shown a prominent increase, as seen by 0.22 billion increase pre-COVID and 0.37 increase post-COVID. This is due to company policy of investing 70% of excess cash into fixed deposits. But also we anticipate the increase to continue. However, the revenue from equity issuing has shown an increase pre-COVID, but a decrease in post-COVID. This is due to various delisting and also the decline in various companies that were cross-listed. Thank you.
Yeah, we calculated a share price of TZS 2048, a 14% premium from a closing price of 1,800 Tanzanian shillings. This value was made through 2 models, which are relative valuation and absolute valuation. Where in relative valuation, we consider one geographical peer set for self-listed stock exchange. And also the approach we used there was the application of historical premium discount versus median approach. Where on the absolute valuation, we considered 2 models, which were dividend discount model and discounted cash flow. Where we believe that in dividend discounted model, the company keep on maintaining their policy of dividend distribution per year. And also the discount cash flow, we believe the catalyst could be the transaction fee from interest revenue, and catalyst will be the transaction fee, interest revenue, and listing fee. Also, we consider that the weighted average cost of capital is 100% from the equity, because if the company has currently have 0% leverage ratio. And if the company could consider to take the debt in the forecasted period, we have seen that it could end up in getting a risk of bankruptcy, or include other risks such as inflation and interest risk.
Going to financial analysis, we chose the EBITDA, net profit margin, return on equity, and we took on dividend distribution. We see that the net profit margin of DSE has been increasing even in the period. We have put it in period pre-COVID, post-COVID, and forecasted. But when check on the EBITDA, we see that during the post-COVID, it's very low. This is because we were in our computation, we didn't include the finance income when we were finding the EBITDA. And mind you, one person can say that if EBITDA is low and the dividend per share is high, how that comes? It's like this, that the DSE during 2019, there was a drastic increase in the investment income. We see that during 2019, they had investment income of 1.6 billion. But during 2020, they had investment income of 2.4 billion. Now that increase was huge. And then in 2022, there was increase also to 2.9 billion. We see now during those years did not make much investment back in the short-term deposits. So in other way, because DSE prioritized its shareholders, they decided to pay dividend.
In our analysis, we have identified mainly 3 risks which could impact our recommendation. The first one being the presence of parallel market and liquidity counters, whereby we do believe that the mitigation keeping in place of tightening the policy and increasing the minimum number of shares to be traded could mitigate this risk. The other risk being the number of listed companies, whereby DSE is expecting to lose about 4 equity counters, including Jatu, Yetu, and Twala. But we do believe that the vision of increasing the number of listed companies could overcome this risk. And the last risk being inflationary risk, as one of the products traded in DSE include bonds, which are highly affected with inflation. But as according to the management policy of DSE, all the investments made are done at 1% above the inflation rate.
Coming to ESG summary, DSE is becoming a mover and a shaker with its growing green mindset and improving the shareholders' confidence beyond balance sheet through various aspects. At a social aspect, DSE has established 2 programs, which is Dar es Salaam Enterprise Acceleration Programs and Endeleza Programs, of which 46 SMEs have been registered under DEEP and 21 SMEs have been registered under Endeleza Program. But also has the annual sustainability training events such as Ring the Bell for Gender Equality. And I think this year, 10 days to come, there will be this event. But also, there will be a promotion to listing of gender products such as Jasiri Bond that is used to empower women. On environment aspect, DSE has encouraged the issuance of green bonds, Kijani bonds. And on governance, DSE is composed of 36% female and 64% male, and at a board level 14% are female and 86% are male. Thank you.
As Dar es Salaam Stock Exchange keep on creating more investment opportunities to its investors and shareholders through network effect with other regional stock exchange, regulatory barriers, brand recognition, favorable margin. Team, what are we saying? This is your destiny. We should recommend you to buy. Thank you.
Thank you for the very interesting presentation. Yes, so imagine you're a risk-averse investor, and your first statement, you said, a lot of people invest, but wise people invest DSE, right? Do you think DSE provides diversification advantage or benefit to investor in our local market? That's number one. Number two is, yeah, that's the only question I had. And I just want to comment on the boldness to go and extend your valuation approaches. You use relative approach and absolute approach, and also other approaches that you use, such as broker's target. That's very, very nice. And I think you're the only group that has extensively used different methodologies to approach your evaluation. So that's very solid. And also you highlighted the issue about illiquidity challenge of the DSC share price. I think that's very, very true and is a challenge that we have in the market. So highlighting it and giving out recommendation what needs to be done, I think that's very, very interesting. So going back to my question, as a risk averse investor, right? Do you think DSC provides diversification advantage or benefit?
Yes, I believe they are making a diversification advantage to the investors, because you see, when you invest your money, you need to think, after investing my money, where are they going to put it? You see that the Dar es Salaam Stock Exchange, when they first receive, when you invest your money, they are directly diversify the investment portfolio by investing in treasury bonds, on which there we are going to get a fixed, risk-free rate return, and also in short-term deposit, on which the banks usually they guarantee them on different maturity period, for 3 months, for 6 months, for 12 months. So at the end of the day, you see the income is keep on promising that I'm investing in the Dar es Salaam Stock Exchange. My money will be there all the time because of the investment portfolio they have. Also, you can speak about their strategic plan phase 3. You will see that they are focusing on making the market to be a right place for each Tanzania local citizen to invest and they make sure that they are getting a return that will be sustainable for them. Yes.
First, I would want to congratulate you for being arguably the best dressed group today. And my question is, you noted that you used relative method of valuations. Okay. Some of the prerequisites for using a relative method of valuation is that the company you are trying to compare should be close to the size, geographic location, and some other factors. Bad enough, you didn't mention the companies you are trying to compare with the DSC. But I would want to know those companies, and I would want to hear how did you bring this company to the common size approach in a way that they were ready to be compared with the DSC.
Yeah, thank you. Because of the time that we just decided that we could put this in part, at the company we use, we decided to put them in the appendix. But we use 2 companies, self-listed. Remember, the Dar es Salaam Stock Exchange is the 3rd self-listed stock exchange in Africa. So we decided to use only 2 self-listed stock exchange in the geographical set of South African Development Community. And we have seen that. If you look at it very carefully, you see there is a lot of deviation in terms of performance, in terms of P ratio, in terms of price to book value, in terms of enterprise value to EBITDA. And what do we do now? Because we said there in the presentation that we decide to use the approach of premium and discount versus a median approach to reduce the impact of those deviation on our valuation. Thank you.
If we can go to a slide on risk.
Okay, good afternoon once again. So the scores we have tallied, and yeah, I want to go very straight to who are proceeding to the next and final round. And the best team here, I will not mention which one took the first, not which one took the second, but I'll just name the two teams which are progressing to the next round. And that is Mzumbe Team A. A round of applause. And it's Mzumbe Team B. Unfortunately, UDSM team didn't make, but again, remember my advice. You can progress further in this line of being investment analyst, and also you can apply for a scholarship to take the CFA certification. So the progressing team, so this is the next round and the final round, all the best. So Lucy, back to you.
risk comes from not knowing what you are doing, but investing in Dar es Salaam Stock Exchange Public Limited, your risk is mitigated. We are Team A. We issue a buy recommendation with a target price of 2,048,000 Tanzanian shillings and closing price of 1,800 Tanzanian shillings at a premium of 14%.
DSC was incorporated. DSC was incorporated in the year 1996 and began its operation in the year 1998 when oil gases was listed. In DSC, there are 28 listed companies, out of which 22 are local companies and 6 of them are cross-listed companies. DSC operates in mainly two business segments, which are trading segment and the CSD segment, whereby in the financial year ended 2022, trading segment reported a total turnover of 5.2 billions and CSD segment reported a total turnover of 1.5 billion. Also, DSC operate under the main two market segments, which are the MEMS, EGMs, and debt segment, whereby in the MEMS we have 22 listed companies, and in the EGMs we have 6 listed companies. And in the debt segment grew by 29.4% for the financial year ended 2022. The route for the customer base in DSC is mainly formed with 5 pillars, which include investors, the issuers, corporate issuers, government itself, data client, and the trainee. The main product of DSC are the equity shares, corporate bonds, and government securities. DSC has efficient technology, which is called DSC Kiganjani, with 10K plus users, both local and foreign users, which facilitated trading to take place anywhere within the working hours of the working days. Also, in DSC, in board they have qualified and ethical management team, which ensure the creation of shareholders' value.
Okay. As in 2023, Dar es Salaam Stock Exchange total domestic market capitalization under the SADC zone ranked as the 4th largest company with a valuation of 4.3 billion US dollars, while in the East Africa, Dar es Salaam Stock Exchange ranked as the 2nd largest company, which all these involve the local and foreign investors, in which they are accomplished due to 2 key drivers, the demand and supply drivers, whereby the demand drivers include the liquidity and monopolistic advantage, while the supply drivers include government incentives and technology. All this, however, we issue a buy recommendation due to network effect with stock exchange, regulatory barriers, brand recognition, and favorable margin.
Pertaining investment summary, we recommend investors to buy because DSC has ensured a potential return to its investors due to its staunch diversified portfolio. As you can see, the prominent increase in listing fees from issuance of government bonds pre-COVID and post-COVID, as even during the COVID-19, the DSC has been resilient and has maintained the increase in listing fees due to investors being able to find where they can invest with low risk. Transaction fees from issuance of government bonds has also increased regardless of the COVID-19 due to increase in the value of treasury bonds from 2018 to 2022. In addition to that, the interest received from investment of fixed deposit has increased by 0.22 billion before COVID-19 and 0.37 billion after COVID-19. This is due to the company policy to invest 70% of the excess operating cash into fixed deposits. However, the revenue from equity listing has increased pre-COVID and decreased after the COVID-19 due to the decline in the value of the companies that were cross-listed.
We calculated the share price of 2,048 Tanzanian shillings, a 14% premium from the closing price of 1,800 Tanzanian shillings at 1st December 2023. On the methodology, we consider 2 methodologies, which are relative valuation and absolute valuation. Where in the relative valuation, we consider 1 geographical peer set by considering 3 multiples, PE ratio, price to book value ratio, and the enterprise value to EBITDA ratio. And then the approach we consider there is the application of historical premium versus median approach. Also, on the absolute valuation, we consider dividend discount model And also we assume that the catalyst for dividend discount model will be the constant distribution of dividend at 50% above. And also on discount cash flow, we also assume that the main catalyst for the increase of cash flow will be realized from the transaction fees, interest revenue, and listing fee. Regarding the weighted average cost of capital, we computed by using two methods, which were dividend growth model and the capital asset pricing model.
Going to financial analysis, we chose the four ratios to use, which was the EBITDA, net profit margin, return on equity, and dividend distribution. Checking on the net profit margin, we see it increasing because even during we have put it in phases pre-COVID, post-COVID, and forecasted. Even during the COVID period, there's brings revenue to DSC. But also checking on the EBITDA, you see that during the post-COVID, you see that it's very low. It's because we never included the finance income when computing it. But DSC has been having a drastic increase in the finance income from the year 2019 to 2020, where we see that in 2019 they had 1.6 billion in their cash flows as finance income, but 2020 22.4, then 2021, that's beyond Tanzania shillings. 2021 it went to 2.7, then 2.9. But you see that during that period, because DSC prioritizes its shareholders, they decided to increase the dividend per share. So you as an investor, you should take that as a point to invest in DSC. Thank you.
Well, in our analysis, we have identified mainly four risks which could impact our recommendation. The first one being the presence of parallel market and liquidity equity counters, whereby we do believe that the mitigation given in place of tightening the policy and increase the minimum number of shares to be traded could mitigate the risk. The other risk being the number of listed companies, whereby there is a fear of losing four equity counters, which include Year 2 Microfinance, JAR2, Tanga Cement, and the Swala Oil and Gases, with management combination of 168.7 billions. But we do believe that the mitigation given in place of ensuring there is an increase in number of listed companies could overcome this risk. The last risk being the inflation risk, whereby among the product in DSC being the bonds, which are highly affected with interest rate, but the mitigation given in place of ensuring that all the investment done by DSC are 1% above the inflation rate could overcome this risk.
Pertaining ESG, DSC is becoming a mover and shaker with its growing green mindset and has tried to improve the shareholders' confidence beyond the balance sheet through various aspects. At a social level, DSC has established the two programs, which is DEEP and Endereza, and up to now, 46 SMEs have been registered and 21 SMEs have been registered. And according to World Bank, we know that the SMEs contribute by 40% of employment and 60% GDP. But also at the social level, there is annual sustainability training events such as Ring the Bell, and this is done to promote or to empower women, and it is going to be done in 10 days to come for this year. In addition to that, by supporting the listing of gender-focused products such as Jasiri Bond were issued by NMB, and this is targeted to improve and support the SMEs that are led by women and empower women as well. At environmental level, the DSC has supported the issuance of green bonds, and also governance as concerned, DSC is composed of 64% men and 36% women, but at a board level, 14% women and 86% men. And according to that, but also we try to do the peer, and actually Dar es Salaam Stock Exchange and NSE are actually correlated in terms of corporate governance.
As Dar es Salaam Stock Exchange ensure investors' money are held to create more opportunities through network effect with other regional stock exchange, regulatory barriers, brand recognition, favorable margin. Team, what are we saying? DSC is your destiny. We recommend you to buy. Thank you.
First of all, congratulations for reaching the final stage. I have a couple of questions. Maybe we can go to one slide on risk, where you covered risk. Yeah, that one? Yeah. I've seen you've covered market, credit, liquidity, inflation. So my question, I think I have two. with respect to risk, DSE operates with a lot of technologies. They've got a number of platforms used for trading, including the apps like Isaki Ganjani, the trading platform, and so forth. And they are well connected to other vendors, including the financial institution. So my question will be around the operational risk. What will happen if, by any chance, DSE attacked in terms of maybe cyber security happens? And what are the mechanism or measures that have been put in place to make sure that the trading activities continue as usual? So that is an operational risk which is I haven't seen been covered in your presentation.
Well, I would like to take that one. Please, can you take us to slide number 3? Yes, in DSC, as he said, there is DSC Isaki Ganjani, well, and the platform which they use to trade. But this is technology based, but sometimes they can be attacked with cyber security. For this case, DSC has disclosed that they have a backup plan. I mean, they have a robust ICT. It means that it has maximum security. Also, a backup system which can store data. I mean, there is no. I mean, the risk of cyber security is low.
So I can add on that. While I was checking on the Johannes Stock Exchange and also Dar es Salaam Stock Exchange, then I found that there is one of the basic system which is there to support security system, which in fact if there is any cyber issues it happen, the company can be able to recover it quickly. And that's one of the things that make a trading platform to be more secured and safe for investors.
But that is for GSE, not DSE.
DSE, there is one. I don't know, but it was I showed it in the report. But
okay.
Here the presentation does.
That's fairly fine. Okay. Then another one is on Porter. There's analysis on Porter on competition.
Yeah.
I can't remember which slide. That one. That one.
Yes.
I've seen you've ranked threat of substitute product as low, and power of customer as high. Can you elaborate why do you think threat of substitute is low and why customers have much bargaining power over DSE?
Yeah, we decide the threat of the new entrant is low, the threat of substitute product also low. It's because of the Dar es Salaam Stock Exchange enjoy that monopolistic advantage. So if you're enjoying that monopolistic advantage, at the end of the day, you will end up being the one institute that's providing the particular product. And also, when we speak about the bargaining powers of the customers, it's because of the power of the customers on making decision. For instance, right now, you may just wake up in the morning and say like, today I want to buy CRDB shares, or I want to buy this. So at the end of the day, that power it remains on the interest appetite of the shareholders. That's why you give the power to customer to be high in terms of making decision on to buy or to sell the share or to hold the particular shares.
Okay, so I think maybe in your analysis you most likely have confused the two things. Yes. You're confusing investors with the buyers. Who are the customers for DSE?
The customers. Yes, we identify the 5 customer base, where we name the issuers, we name the government, we name investors, we also name the training client and also data client.
Okay.
We identify those as the main customers. So we have a lot of number of customers, but those are the main. And then we identify that what the power do they have. For instance, the government can decide like if we are getting a lot of external, we are getting a lot of the finance from external, rather than issuing local bond. What will happen? What will happen is now the Dar es Salaam institution will end up not performing, not doing anything. That's you see that power. What will happen? But if you speak about the power of I think I'm.
So okay, that you have tried, but let me.
Thank you for additional 5 minutes. I take it as up until now, you guys have done a good work and you have gone thoroughly with the company informations, and your analysis have displayed a commendable job. But as analysts and equity researchers today, I would want to hear from you that you have forecasted the cash flows of the DSC basing on what has happened before that, right? So I just want to know, if you're given chance to suggest on a PowerPoint, which one would be? Take it from an angle of investment analyst.
Thank you. Faraja, can you take me to the risky part? Yes. Here, I think I will recommend, I have a recommendation for the delisted companies. I think I was reading the story of Yatu Company, the story of Swala and Oil Gas, the story of Yatu Microfinance, and the story of Tanga Cement. If I start with this Tanga Cement, I think I would advise the Dar es Salaam Stock Exchange, like, if there is huge investment that I expected from outside, because the external investors, they are much interested with the company which are performing very well. So at the end of the day, you find that Tanga Cement, they are coming, the investors who are very interested in investing in those performing companies. So they end up taking a number of shares, a lot of shares, or they are taking high percentage in ownership of share, in which at the end of the day, the power of local investors is diminished. So I suggest that if there could be measures that we need to maintain these listed companies, and we need to keep on increasing the number of listed companies. Then we need to have a policy that will be there to support those companies, to make sure that the risk of acquisition from the outside to be lower, even if there is acquisition, but the percentage of ownership, like the Dar es Salaam Stock Exchange, you see there the percentage of ownership is 15% by government. What does it mean? The solely power, it's now remained to the government. And the remaining, you find there is other stakeholders, which they have lower percentage. So I think they could made up a policy to support these companies. Another issue is about this parallel illiquidity. I found that TBL is owning a very huge 48% up to 50. You see that if someone is want to perform any transaction regarding selling or buying TBL shares, he found that there's no need of going to the market. There's no need to go to DSE. I can discuss with those people who are there. They are going to sell it at a very low price. You find it is 3,000 or up to 1,000. Now you find the price at which are shown in the board, it is 10,900. But when you look at the counter of the Tanzania Breweries Limited, they are selling at a very low price compared to the market price that are shown. So I think we need to have a strong policy regarding this, that we need to know what can we do in order to improve the price issues between the trading, the block trade that have been done, which reduce liquidity at Dar es Salaam Stock Exchange. Yes.
Okay, quickly. Hongereni sana for that interesting presentation. I noticed something. As we keep on going forward, you guys are improving your presentation. I think kuna data mnaziingiza. So that's very, very good. All right, so you highlighted the issue about governance of the company. I think that's very good, kwa sababu most of presenters, they are focused on quantitative analysis. That this is another aspect of qualitative analysis. I think you're spot on, given kwamba governance is very, very important for any investor investing in that company. So that's very good. As well as SWOT analysis, which I think is a common for every presenter. They did that. I think the governance part, that was icing in the cake. That's very good. Now, revenue assumptions. Kuna baadhi ya numbers, I think that we're not seeing them, especially the beta and the revenue drivers and assumptions. What was your beta? Because you have showed us, or you've stated valuations almost ziko kama tano. Now, those two that you used, the absolute valuation approaches.
Yes.
What was your beta?
EBITDA.
Yes.
Yes.
Beta.
Beta.
Yeah, beta.
Ah, okay. Yeah, we
Just mention the number.
0.82.
Okay, great. And the revenue drivers, what was your assumption year-on-year growth?
Year-on-year growth. Hey, can you take us to the assumption? Back. Yes. On the income statement assumption, one of the assumptions regarding listing fees was the growth rate is based on the plan of DC to increase listing of company and new product, whereby the equity listing fees are expected to grow by 7% based on the growth rate predicted by African Development Bank and IMF.
Oh, so what is the weighted average?
What is the average for
the revenue growth?
We divide because we have listing fees for the equity listing fees.
Yes.
For the
So what's the weighted average?
weighted average, we assume the growth to be 7%.
7%.
For listing fees on equity.
Mhm.
But for the bond, we assume to be 17% up to 18% based on the debt to GDP ratio.
Okay. So the terminal growth is 6%.
We assume 7.
7.
Yes.
All right. That's very aggressive, but okay. This time's up. All right.
Okay. All right. Thank you.
Excuse me, guys. Presenters, please make it short and succinct so we can ask you questions. All right? So you don't have enough time today. All right, Jitahidin. All the best.
Yes, the component which you have used in arriving at intrinsic value of 1,387 is risk-free rate of 10%, which is yield rate of Tanzanian treasury bond of 5 years, beta of 0.8 sourced from Damodarans, from the financial services, which non-banking and insurance, equity risk premium of 12.64%, sourced from Damodarans, Tanzania equity risk premium, and we have applied cost cap performance to arrive at cost of equity of 20%, terminal growth rate of 6%, which actually obtained as an average of sustainable growth rate, and we believe that will be the continued growth of DSE within a comparison of the average nominal GDP of Tanzania, which is 8.40%. Other details which we have used in coming out with intrinsic value from DDM is payout ratio of 56%, which is above DSE policy of 50% of its net income, giving out dividend to its shareholders. Going to another method of evaluations which we have applied is discounted cash flow. We actually discounted cash flow, and the component which the reason of using the discounted cash flow method is just due to the ability of the company in generating cash, which is actually indicated by the improvement of earning per share for the first 5 years from 2018 up to 2022 in our analysis. The component which you are using here is the same as the DDM, and we arrive at a intrinsic value of 2,108. Then we give more weight to discounted cash flow of 80 to 20 to DDM. This is actually influenced by the earning per share being higher than dividend per share for the past 5 years. I will also take you through the investment risk, as it's known that there is no business which operates without the consequences of risk, but there are management initiatives in eradicating and minimizing the effect of this risk in business operations actually guide us into buying recommendation of DSE shares. We analyzed there is 5 risks in relation to DSE operations, but we have used the risk matrix evaluations in determining its likelihood and impacts in DSE operations. In our analysis, we determined that credit risk is a major risk because in asset portfolio of DSE, more than 55% of its assets are in short-term deposits in commercial bank. So we believe that if there will be failure in the commercial bank, it will actually affect this operation in terms of revenue corrections. Other risk which you have come out with is inflation risk, which actually which is actually going to affect the DSE when the purchasing power of money may decrease, will reduce the amount of money or the value of money which we expect to receive as interest from its investment. And other risk which you have seen, it is inherent risk, which actually can't be avoided in any nature of business operations, and DSE is concerned. Another risk is liquidity risk, which actually relating to DSE due to its more reliance in short-term deposits, so that need more financing in short-term deposits, it can either lead into liquidity risk. Another risk we're focusing on market risk is interest rates. The change of interest rates of fixed income securities such as treasury bonds will eventually lead into risk to DSE, since it will reduce the value of the holded shares by DSE. This is actually can be reflected now in the market due to the issues of treasury bonds of Tanzania. Yes, due to the issue of treasury bond of Tanzania, which actually comes with higher interest rate than the holded share by DSE. That makes the holded share by DSE having lower value when they want to sort it out.
Thank you, and I'll take you to ESG, whereby our analysis depended on sustainable development goals as well as sustainable stock exchange. We have currently heard of Tanga Water Green Bond, which this bond is not listed in the stock exchange, but is supported by DSE. We think that this bond is going to open market for other bonds to come, and is going to conserve the environment since they're operating on green and clean water for the community. Also, the initiation of Scholar Investment Challenge will create more markets and many investors to come from this youth generation, which we are the generation. So we hope in the near future, DSE will have a lot of investors, which will increase the income as well as the investment portfolio. And to conclude, our ESG is supporting the by recommendation of DSE, since DSE itself is committed and dedicated in promoting ESG matters.
Okay. What's the dividend yield for DSC PLC? What's the dividend yield? Do you have the number? Was
So we calculate the dividend yields there from 2018 up to 2022 for actual data, and we found that pertain it there. In financial analysis, can you go in the slide of financial analysis? Yes, yeah.
the earning yield ratio.
Yes.
Is that you're referring to dividend yield? Now here's my question. If that's the case, 11% this dividend yield, and you're recommending me to buy DSC share, while I can get a risk-free asset that gives me a high yield above 12, 13%.
Okay, so from that data showing the increasing rate, and we see that in 2022 it is on it is peak of 22%. This means that on every shares that we invest, we yield a 20% of them. So through the SCE, you can invest in having the probability of getting a dividend is high.
So let's focus on 2022. So you wrote there's 11%, correct?
Yes.
Now compared to treasury bonds and other risk-free assets, now I can get above that. Would you still recommend me to buy DSC shares?
Yes, I can continue to advise you to buy that shares, to invest in DSC because of the greatest potential that DSC have.
Okay, in addition to that, I can recommend you to buy in DSE shares. When you're focusing this risk-free treasury bonds and treasury bills from the government, it actually had the fixed rate of returns. But when you're investing in DSE, there's possibly increase in rates due to the performance of the company, and we see in good position of performing well. So that's rate mark is 2022, but you can see it's going to perform higher due to the nature of its operation as monopoly and predicted to be good in performance. So we expect it to increase.
All right. So last question, for the interest of time, did you say barriers to entry is high or low? No, just mention.
Low barriers to entry.
So anyone can become a DSC.
Actually, in analyzing us to arrive at low barrier to entry, we focus on the rules and regulations for an stock exchange like this to exist. We're just focusing on rules, and we see that the rules doesn't prohibit for any organization or any institution who want to become a market, but it's a monopoly company.
And I thought it should be vice versa then, because if it's a monopoly company, most of the times the characteristics attributed to a monopoly company is barriers to entry.
Okay, when we talk of the barriers to entry, it's low. The concept that DSE is monopoly, it doesn't change the fact that barriers to entry is low, because when we talk of barriers to entry, there are some factors which we look into, naming it being low or high, because there are factors like, let's say, initial investments which is needed to start up such nature of a business. So if it's high, it means it's a threat to other maybe let's say other investors or other communities we think of coming up with same business. We are having also other operating costs being high, government regulations, and so many forth. So the concept of monopoly doesn't stop it from being low.
Okay, patch me up with these two quick questions. DM. I think it's on the valuation. Okay, that's one. You highlighted that payout ratio in 2022, from 2020 to 2022, was 60, except year 2022 where there was a slight increase of up to 62, right? And suddenly, on your forecast, 2023 going forward on your forecast, can I ask the second question or just leave it here?
Okay, thank you for the good question. But we actually, the 56% which we have used in our forecasted period, we obtain as an average of payout ratio from 2018 to 2022. But doesn't mean that there's decrease on the DSE policy of 50% above its net income.
Okay, good thing I'm not questioning that whether you are right or wrong. I'm questioning that what made you decide that it's 56? Was that just plugging number, or there was a specific reason for doing so?
Yes, we are living at 56 percentages. We arrive that figure because we find out an average of payout ratio from 2018 to 2022. Then we just forecast to be throughout our forecasted period.
And so many questions. Why was not 70? Why was not 65?
That 52 is marked as an average of the payout ratio from 2018. That 56 was an average of payout ratio from 2018 to 2022.
The average there is 60 something, 16 point something.
Actually, due to the size of presentation and what we want to show there, but actually we're just using an analysis comprised of 5 years past from 2018 up to 2022.
Okay. Thank you for that. And the second question, you mentioned that the highest risk for the DSC is credit risk, right? Explain to me, how is credit risk a risk to the DSC? Is DSC a lender, or kindly explain to me?
Okay, thank you. On the side of credit risk, DSE, its assets, as I have explained, more than 55% of which are in short-term deposit, the commercial bank. So, in the sense that commercial bank will fail to operate, will actually affect the amount of interest DSE will expect to receive from its investment. It's something like lending, but not in such a way of lending, but it's giving out of investment in short-term deposits. It will eventually affect if there will be any failure initiatives in handling this credit risk in relation to DSE operations. As we have seen there, the placement of fixed deposit is made with the commercial bank approved by the board. That will be the best measure where the DSE management has just come out to defend itself from the credit risk.
Okay, just to be clear, you think that the amount of deposit DSE is putting into banks, there are times where this bank can give really low interest rate, right? Is that what you mean?
Yeah, we actually mean in the sense that the bank where DSE put its money, it may either fail to operate in any circumstance, but will either failure to return DSE interest or its initial amount due to in the maturity of.
But again, on your other risks, or risks you mentioned, did you mention interest rate risk?
Yes, in market risk, yes.
Okay, I rest my case.
Maybe if we can go back to a slide on evaluation. Time is up.
Hello. Sijui nitangaze mimi au ni mwito wa CRDB aje tangaze. I feel like somebody needs to announce a winner, not me. Yeah.
Jamani, habari za mchana. I hope mmeenjoy session. Mimi nimefika dakika za mwisho, nafikiri kama half an hour hivi, lakini nimejuta kwa nini nimechelewa. Kwa hongereni sana kwa washiriki wote, na naamini kufikia hatua mlofikia wote ni washindi. Ni vile tu hatuwezi kutoa zawadi moja kwa watu wawili, so lazima itenda kwa mtu mmoja, sawa eh? And mshindi wetu kwa siku ya leo, unaweza mkaguess nani? Umekosea. Mzumbe team A. Jamani, au mbona kama ya wivu? Hongereni sana, hongereni sana, hongereni sana.
Anyone from DC here?
Walter Shonjo. The last one is for Faraja. Okay, we also have a certificate for their faculty advisor, who is CPA Miss Adelaida Barnabas Senga. Kwa story fupi, Miss Adelaida alikuwa ni mshiriki mmoja kati ya washiriki wa mwaka jana, na timu yake pia ilikuwa ni kati ya washindi. Kwa hiyo mshindi ametengeneza washindi wengine. Kwa hiyo hii ni message kwa faculty advisors pia. Unaporudi vioni, please tunaomba mkae karibu na wanafunzi wenu, mkawasaidie, kwa sababu the more mnakaa nao karibu wanapata knowledge. Kwa kweli hii team A walikuwa wana knowledge. Wameulizwa maswali mpaka mwenyewe mtu mwingine wa pembeni unashangaa. Kwa hiyo pia tunakushukuru sana Miss Adelaida, kwa kweli tumeiona nani yako, na hongereni sana Mzumbe.
This one is for the university. Ya chuo kikuu.
vyeti nilikuwa napenda ku invite CRDB
Good afternoon once again. Kwanza kabisa ningependa kuwapongeza CFA kwa hii initiative. Nafikiri ni kitu kizuri sana. Hongereni sana, hongereni sana, hongereni sana. Lakini pili, kwa wote ambao mmefanikiwa kushiriki siku ya leo, nafikiri hamtojutia going forward, kwa sababu nafikiri some of us uko nyuma probably hatuweza kufanikiwa kupata some of these opportunities, na tunavyoziona leo tunasema wow, light if ningezipata probably could have been somebody else. Lakini nafikiri unaweza kukaa umekaa unajiuliza unakusema CRDB, kwa nini hii event? What's there for CRDB? Wameona kitu gani? I think it's because we consider ourselves to be partners of your choice. Hii ni kwa aina yoyote ile ya mtu, iwe ni kampuni makubwa, iwe kampuni ndogo, iwe kwa mtu binafsi, iwe kwa kijana, iwe kwa mwanamama, across the board we consider ourselves to be a partner of choice, and that's why we are here. And that is not because of the track record that we have in the market. I think it's because of the drive which makes us which define our existence today, which is our purpose. Our purpose inasema we improve livelihood and deliver sustainable impact. This is delivering sustainable impact in the community. Kama nyinyi mkijijenga leo, maana yake nini? Maana yake ni kwamba in the future tunategemea kuwa na corporate ambao wako very knowledgeable about the market. Sawa, mimi I don't remember having knowledge about DSE nikiwa niko chuo, but kumsikiliza brother anaitwa nani? Emmanuel, the way alivyokuwa confidently anatetea point yake ya kwa nini ameweka hiyo earning yield ya I don't know, was it 7%? I was like, wow, by then I couldn't have done that. I think that is one of the reasons why we are here. And I think if you consider the overview of CRDB, we consider to be ourselves to be a very strong and credible brand in the market, and everyone would want to be associated with us. And for that reason, when Lucy came to us and said, hey, can you please be part of this beautiful event, we said, why not? You know, we are here since 1996. From then, a lot of things has happened. Again, we are listed in Dar es Salaam Stock Exchange. Somebody spoke about Tangawasa bond. We also issued our bond last year. I don't know, sadly you didn't mention. It was called, who knows it? Madam knows you. What was the name of the bond for CRDB? Yeah, so we have, and mind you, we are the first to issue a green bond in this market. We are the first of so many first in this market, and for that reason, that's why you keep seeing us more and more in this kind of events going forward. In terms of service, wangapi wana account na CRDB mpaka sasa hivi? Jamani, ambao hamna, it's a shame. In a positive way, because now you've got an opportunity to just download the app, Sim Banking, and you can just open an account at the comfort of your your sitting room. You only need your ID card, right? Simu yako iko na kamera nzuri, ukipiga your fingerprints ina pick up, kila kitu kinakuwa sawa. And mind you, this is the first SIM banking in the market as well. Very modernized, very easy to use. All your utilities you can do in that platform. And for that reason, we said, if we have youth here who don't now use SIM banking, then what are you using in this market, right? So what was the reason, or one of the motivation for us to be here is to make sure that, you know, in the quest of driving financial inclusion, we include even you guys who are in the next few years going to be in the corporate world. We don't want you to start suffering, you know, unaenda kwenye benki ambazo we never know, kazi ya kwanza inaweza ikawa ni Namtumbo, right? If you are in Namtumbo and there is no branch, what do you need? SIM banking, right? Yeah, so CRDB, we are here to save you. So I think for that few remarks, guys, thank you very much. Kwa mara nyingine tena ningependa kuwashukuru sana na kuwapongeza. Kwa wale ambao hamjashinda, msikatike moyo. Kama bado uko chuo, I think next year pia kuna position nyingine you can apply. and apply until you become a winner. And siri moja ambayo nimeona kutoka kwa team A, naomba ni share nao. Naomba mkasimama team Mzumbe team A kama bado mpo. Jamaa walikuwa wamejipanga sana kushinda jamani. Ona walipopendeza. So yeah, ongereni sana. I like the ties. You know, I was asking myself why you don't have ladies representation, but during kutoa zawadi hapa nimemwona, so ongereni sana. Team B, Mzumbe team B. Hongereni sana, nyinyi pia ni washindi. I like the ladies were very confident. Dada nimefurahi umemention Tangawasa, so please endeleeni kuongeza knowledge na kila kitu. Market sasa hivi inahitaji mtu ambaye yuko confident, but apart from being confident you need to have the knowledge that you guys are trying to acquire kwenye mazingira kama haya. So in a nutshell, that's it guys. Hongereni sana na naomba niwatakie siku njema kwa muda uliobakia. Asanteni sana.
So I would love to thank each and every one of you. This is the end of our beautiful event. Thanks to our partners. I think this is the beginning of our collaboration. We have so many events. The next one is Kigali. It will be in Kigali for investment conference. We'll also invite each and every one of you to attend. It will be virtual and physical event. We'll share the link. But more about the East Africa investment landscape. So on behalf of the CFA Society East Africa and the CFA Institute, I would love to thank each and every one of you. So this is the end. So yeah, I wish you all the best. Remember to interact, you never know. Remember you students to interact with those guys from CRDB. You never know, maybe you can get some of the business card whatsoever. So thank you very much. Have a good afternoon.
Thank you.